Hey, welcome back to YT Finance, and today we are talking about Amazon, MGM, AMC, and GME stock news. We will start by discussing why Amazon is acquiring MGM Studios, how much this acquisition will cost Amazon, and how it will impact the AMZN stock price. Next, we will talk about what Jim Cramer from CNBC's Mad Money thinks about GME stock and AMC stock, and then we will look at how much money GameStop and AMC Entertainment have caused short sellers to lose. Lastly, we will go over if AMC stock and GME stock are good stocks to invest in and how much more they could possibly get short squeezed. Go and press the like button on this video right now for more stock news and analysis. Comment your thoughts down below on GME and AMC stock. Turn on subscription notifications if you are new, but right now let's make you some free money with Webull. Webull is a free brokerage app where you can buy and sell stocks, options, and cryptocurrencies. But right now you can get two free stocks with Webull. You can get the first free stock, which can be worth anywhere from $2 to $250 for just creating an account. And you can get a second free stock, which can be worth up to $1,600 if you invest $100 or more on your first deposit. You will have a 1 in 100 chance of getting stocks like Facebook, Starbucks, or Snapchat, and you have a 1 in 50 chance of getting stocks like Google or Procter & Gamble. To get this offer, just press on the link in my description box down below, but do it quickly because this offer will not last forever. And without further ado, let's get into today's stories. Amazon, ticker symbol AMZN, is investing very heavily into growing its position in the entertainment industry to compete with the likes of Disney and Netflix. So, Amazon is acquiring MGM, which is the home to many classic Hollywood movies. The acquisition is valued at $8.45 billion, which will give Amazon the rights to over 4,000 movies and over 17,000 TV shows. Mike Hopkins, who heads Amazon Prime Video and Amazon Studios, had this to say about the acquisition, and I quote, "The real financial value behind this deal is the treasure trove of intellectual property in the deep catalog that we plan to reimagine and develop together with MGM's talented team. It's very exciting and provides so many opportunities for high-quality storytelling." Amazon's CEO Jeff Bezos also seems enthusiastic about this acquisition, and I quote, "The acquisition thesis here is really very simple. MGM has a vast, deep catalog of much beloved intellectual property, and with the talented people at MGM and the talented people at Amazon Studios, we can reimagine and develop that intellectual property for the 21st century. Now, Amazon's streaming service is a small part of their empire, but they are developing themselves to be a top contender in this space because they have over 200 million subscribers compared to Netflix, which has around 208 million. Amazon has come out with and hosted many great movies and TV shows, including a series that will be based on the Lord of the Rings series, which is currently being worked on right now. If you are having a hard time understanding why Amazon's acquisition of MGM is such a big deal, remember that basically every movie that has the intro with the roaring lion in the beginning and before the movie starts will now be property of Amazon. One of the movie series that Amazon will now own is James Bond, which has racked in over $60 billion throughout the years, which would pay for this acquisition multiple times over. Plus, the new James Bond movie named No Time to Die is set to release in October of this year, which is bound to pay off for Amazon. Amazon sees how lucrative streaming services can be based upon the immense success of Netflix and Disney+, so Amazon's goal is to buy up as much content as they possibly can afford before their competition beats them to it. This new added content should reflect very positively on Amazon's stock price as well as their overall viewership. Now let's talk about GameStop's GME stock and AMC stock. Jim Cramer, who's the host of CNBC's Mad Money, says that he is not sure why investors are betting against GameStop and AMC Entertainment at the moment. Cramer says this, and I quote, "Anyone shorting AMC or GameStop is out of their mind. Wall Street bets is too powerful, and trying to bet against them right now is just giving them more ammo." And I see his point because the stocks are still being short squeezed, which has led the GME stock price to rise over 16% on Wednesday and the AMC stock price to rise over 19%. However, with that being being said, GME and AMC both are not good long-term investments and will eventually crash. These stocks are not trading off of fundamentals at all, which is why a crash or a steady decline in the future is imminent, and Cramer agrees with this. Now, AMC stock and GME stock are amazing day or swing trading stocks, so people definitely can make great money here, but the point is to get in and get out quickly with profits intact so you don't get burned. Cramer goes on to say this: "I've never seen anything like this, a group of buyers with no sensitivity to price. These people don't have unlimited firepower, but they've got enough firepower to engineer a short squeeze anytime a bunch of the professionals decide to bet against this thing." Both GameStop and AMC have 20% of their float still being shorted compared to a regular stock which has about 5% being shorted, so this means that there can still be more opportunities for future squeezes. I would say that Wall Street Bets is doing a great job getting their point across because the GME stock price has surged over 1,180% in 2021, with the AMC stock price trailing behind it with over an 800% gain. The point here is to give big money a taste of their own medicine, which has been very effective considering that GameStop and AMC stock combined have made short sellers lose $754 million, and that was just on Tuesday, as their stock prices continue to rise 18% and 39% respectively. This is clearly a pattern because the day after, on Wednesday, GME stock and AMC stock gained more ground, which collectively caused short sellers to lose $673 million. According to Bloomberg, short sellers have lost a total of around $8.1 billion, which has sparked somewhat of a movement which caused many investors that hold stocks of the video game retailer and the movie theater chain started posting on Twitter with the hashtag AMC500K. Now, I think what Wall Street Bets is doing is fine by getting back at institutional investors that have taken advantage of the system, but this will eventually cause retail investors to lose loads of money as well. For example, no matter how many times GME stock or AMC stock rally, it will eventually fall again, so the shorts will eventually win. Secondly, I personally will not be investing into either stock, not because I don't believe in the movement, but rather I am not confident in my ability to trade those stocks in time. I would much rather stick with pre-anticipatory runs before catalysts or momentum plays instead of these particular short squeezes. I feel bad for people who put either of these stocks in a retirement account by thinking these are good long-term plays. I would rather not get in at all, but if you are already in or you have good trading skills, get in and get out with profits intact. But what do you all think? Comment your thoughts down below, hit the like button right now, subscribe if you are new, and I will see all of you in the next YT video.